Now friends, come to the questions on this particular section 10AA. Okay, now I will just increase the level of understanding by extending the scope of the question. So technically this particular question is asking me that you only have to compute the deduction available under section 10AA, but I will extend the scope. Okay, now see, first of all let's discuss 10AA. Okay, now first of all, this is a company. Okay, since this is a company, the company can also have a MAT implications. Okay, so a corporate entity subjected to the MAT provisions, you might also have to do the MAT calculation. Actually this question is not asking you tax liability calculation, but I'm just extending the scope of these particular question types. Okay, now see, first of all, profit from the above undertaking is 5 lakhs. From this I'll have to give a deduction. One of the note that I'll have to write, see, 3 notes that you should not forget. One is that you assume that you have filed the return of income. Second one is that what is the meaning of the export turnover. And 3 is that you have assumed that within a period of 6 months from the end of the year, you have already brought the monies into India, and only then it will be regarded as export turnover. Otherwise it will not be regarded as export turnover. Okay, so 10AA, see, total sales is already given to me. I want export and domestic. Okay, so this is my export figure 40. Okay, but how much money have I brought into India within a period of 6 months is only 36. Okay, so my export turnover will not be actually 40, but it will be only 36. Or some of the questions will tell you that out of 40, 4 lakhs is not brought into India, so you can do 40 minus 4 also. So depending upon how the question data has already been presented. Okay, so my 5 lakhs multiplied by 36 divided by total turnover. Okay, that is 50. Okay, once I will do this multiplication, I will get this 10AA deduction. Okay, and the balance will be my total income chargeable to tax. Is that very much clear? Now on the total income which will be chargeable to tax, I will have to consider my normal tax liability. Okay, as per my corporate tax rate, that is a pure calculator work. Okay, and MAT. Okay, I have to consider the MAT tax liability. Now in the MAT you require a book profits. Okay, now looking at these figures, the book profit itself is 5 lakhs. Okay, so you assume that this profit from the undertaking is also same as per the books of accounts, because in the MAT provision you need it as per the books of accounts. Okay, and in the MAT 10AA adjustment is not required to be done, it is not warranted. Okay, because in the MAT adless adjustment section 10 benefits have been given, but 10AA etc. benefits have not been given. So on the 5 lakh rupees you apply the MAT and get the amount of the MAT tax liability, compare normal tax liability and the MAT tax liability, and then take the decision. It is your first part of that particular answer. Okay, so update this when it comes to the first part of that particular answer. Okay, now the second part, or rather I will say the extended version. Okay, supposing if company is covered by 115 BAA provisions or BAB provisions, the corporate special rate of tax. Okay, so in that case the MAT provisions will not be applicable. Okay, if you are covered by 115 BAA provisions, then the MAT provision have been exempted with. Okay, however you will have a special rate. Okay, and you will not get the specified exemption deductions. I repeat, you will not get the specified exemption deductions, and in that particular denial, this section 10AA also you are not going to get. Okay, so you'll give a special rate, simple computation without any specified exemption deductions which are specified in the respective section, that is 115 BAA or BAB as the case may be, depending on the situation. Okay, and special rate, and there will be a special flat surcharge with respect to this. You have to multiply and get the amount of the tax liability if you are covered by 115 BAA provisions.